Welcome everyone to this StockExplorers deep dive. Today we're focusing on Reddit. Now, many of you probably use it, maybe daily, but thinking about it as an investment, that's a different angle.
It really is. Fundamentally, you've got this huge collection of communities, right? The subreddits.
Anything you can imagine. Vintage watches, astrophysics, even just cat pictures, like you said. There's a corner for everyone.
Exactly. And it's the users driving it all. Posting, commenting, arguing, constant activity. That's the core value, really.
So how do they actually make money from all this vibrant chaos? Seems like two main ways.
That's right. Advertising is the big one historically. And then there's this data licensing piece, which is getting a lot of attention now.
Okay, advertising first. Pretty standard stuff. Businesses pay to show ads.
Yeah, similar to other platforms, but with a twist. Reddit lets advertisers target super specific interests based on those subreddits people hang out in.
Ah, so if you sell, I don't know, fancy coffee beans.
Right. You don't just blast everyone. You hit the coffee subreddits. People already interested, already engaged, potentially much more effective.
Makes sense. Connecting with people already raising their hands, basically.
Okay, what about the second stream? Data licensing. This sounds newer. And tied to AI.
Very much so. Think about all those conversations on Reddit. Millions of people talking, debating, asking questions, sharing experiences on every topic under the sun. It's this massive, archive of real human interaction.
And that's valuable for training AI models.
Incredibly valuable, especially for these large language models trying to understand how humans actually talk and think, all the nuances, the slang, the arguments.
So companies like Google, OpenAI, they're paying Reddit for access to this huge conversational data set to make their AI smarter.
Precisely. It helps the AI grasp context, generate more human-like text. We've heard about some big deals reportedly around $60 million a year from Google, maybe $70 million from OpenAI. It's a significant new revenue stream. Wow, okay. So with that business model in mind, our goal today is to really dig into Reddit's recent financials, look at their growth prospects, revenue, profit, and especially unpack this AI strategy.
Yeah, and their first quarter results for 2025 give us a lot to talk about. They were strong.
Definitely set the stage. Yeah. So Q1 2025, what were the headline numbers?
Record revenue came in at $392.4 million. That's a 61% jump compared to the same quarter last year. Pretty substantial growth.
61%. Okay, that's impressive. What was driving that big increase?
Well, it was really both parts of the business firing. Strong growth in advertising revenue, which we can get into, and also the first real noticeable impact from those AI data licensing deals starting to hit the books.
Got it. And beyond just the top line, the revenue, there was a big milestone on the profitability side too, wasn't there?
Yes, huge. First time reporting GAAP profitability as a public company, they posted a net income of $26.2 million.
That's quite a turnaround from the loss they had the year before, right?
It is, but it's important to remember Q1 of 24 had massive expenses tied to the IPO itself, like stock-based compensation. That skewed the comparison quite a bit.
Right. Those IPO costs can muddy the waters. So we look at the underlying operations. How did things look? Adjusted EBITDA, maybe?
Very strong there, too. Adjusted EBITDA surged to $115.3 million. That really shows the core business is becoming much more efficient and profitable.
And what about users? You need users for ads and data.
Absolutely key. Daily active uniques, or DAUQ, they were up 31% year over year, reached about 108 million.
Solid growth. Anything interesting about where that growth came from?
Yeah, a lot of it was driven by international expansion. Seems like their efforts to grow outside the U.S. are really starting to pay off.
Okay, let's break down that revenue number more. Advertising is still the biggest piece, yeah.
Oh, yeah, by far. Ad revenue was $358.6 million, also up 61%, right in line with the total revenue growth.
And what's making the ad business grow so fast? More users see more ads. Better pricing.
It's a bit of both. Definitely more ad impressions because of user growth and engagement. But also, they seem to be getting better pricing for those ads. Suggests advertisers are seeing value and demand is up.
Makes sense. I saw something about performance-based ads being a big part of that growth. What does that mean exactly?
Right. Performance advertising, where advertisers pay for specific actions like a click or a purchase, not just showing the ad. That accounted for about 60% of their ad revenue and drove over half the growth.
So advertisers are seeing concrete results, like sales, coming from Reddit ads.
Exactly. If you're getting measurable ROI, you're likely to spend more. It makes the platform sticky for advertisers.
And are they attracting more advertisers overall?
Seems so. Their advertiser base grew by over 50% compared to last year. And importantly, they're getting more traction with mid-market companies and small and medium businesses, not just the huge brands.
Broadening the base?
Mhm.
Are they adding new ad tools too?
They are. They mention things like dynamic product ads, which are in beta. That could be really appealing for e-commerce businesses, letting them show specific products.
Okay, interesting. Now let's switch gears to that other revenue, the data licensing. You said it grew even faster.
Yeah, up 66% year over year, hitting $33.7 million in the quarter. And the key thing here, besides the fast growth, is that it's expected to be very high margin revenue.
Right. And those Google and OpenAI deals we mentioned are clearly kicking in now.
Definitely. If you annualize that Q1 number, you get to around $135 million. That lines up pretty well with those reported deal values, like the $60 million from Google and $70 million from OpenAI.
So that's a nice chunk of change, and it adds some diversification,
Yeah.
right? Less reliant only on the ad market cycles.
Exactly. It buffers them a bit from ad market volatility. Plus, they mentioned they're talking to lots of other companies about similar deals, so there's potentially more growth to come from data licensing.
Okay, let's look geographically. You mentioned international users are growing fast. Is international revenue keeping pace?
It's actually growing faster. U.S. revenue was up a strong 57%, hitting about $314 million. But international revenue jumped 82% to reach $78.5 million.
82%. Wow. So that faster user growth outside the U.S. is translating into even faster revenue growth there.
Looks like it. Places like the UK and EMA were mentioned. It suggests their efforts to, localize the platform and build out international ad sales are working.
And there's probably still a big gap between how much money they make per user in the U.S. versus internationally.
Historically, yes. Closing that gap, getting international monetization closer to U.S. levels, that's a huge long-term opportunity for them.
Right. Let's circle back to profit. That jump to a $26 million net income is significant.
It really is, a 6.7% net income margin. Now, again, the comparison benefits from lapping those big IPO costs.
Sure. Let's keep that in mind.
But the underlying improvement is definitely there. The adjusted EBITDA number really highlights that.
Remind us of that number again.
$115.3 million adjusted EBITDA, which is a margin of nearly 30%, 29.4% to be exact. That's a strong indicator of core operational health.
And you mentioned something about the incremental margin being really high.
Yes, this is key. For the fifth straight quarter, their incremental adjusted EBITDA margin was over 70%. That means for every extra dollar of revenue they brought in, over 70 cents dropped down to the adjusted EBITDA line.
Wow. That shows real operating leverage. As revenue grows, profits should grow even faster.
That's the idea. It shows the business model can scale really effectively, and it ties into how they're managing costs.
How did costs look?
Adjusted costs only grew 19% year over year. Compare that to the 61% revenue growth.
Big difference.
Huge difference. That's operating leverage in action. Their gross margin also ticked up to over 90%, which is fantastic, helped by the platform's scalability and that high-margin data licensing kicking in.
And cash flow.
Also very strong. Operating cash flow jumped significantly year over year to about $128 million. So the business is generating real cash.
Okay, putting it all together, revenue beat, profit beat. How did this stack up against what Wall Street was expecting?
They blew past expectations pretty much across the board. Revenue was well ahead of consensus. Earnings per share came in at $0.13, whereas analysts were expecting something closer to like $0.02.
13 cents versus 2 cents? That's a massive beat.
It is. Adjusted EBITDA also came in comfortably above forecasts. Even user growth was a little bit ahead of what people were modeling.
So the market might have been underestimating how quickly they could improve monetization, maybe.
Yeah.
Both ads and the data side.
Seems likely. The size of the beat suggests maybe analysts hadn't fully factored in the ad tech improvements or just how quickly that data licensing revenue would ramp up. It could lead to analysts raising their future estimates.
Speaking of the future, what guidance did Reddit give for Q2?
Also pretty optimistic. They're guiding for Q2 revenue between $410 million and $430 million. At the midpoint, that's roughly 49% year-over-year growth, still very strong, and again, well above what analysts had penciled in.
And profitability guidance for Q2?
Adjusted EBITDA expected between $110 million and $130 million. Also beating consensus. The implied margin there is around 28.6% at the midpoint, still very healthy, even if slightly down from Q1's exceptional level.
So management sounds confident about the next few months, continued momentum in ads, international data licensing.
Exactly. The guidance reflects confidence in all those key drivers.
And what are analysts thinking longer term, beyond Q2? Still strong growth.
Generally, yes, though the expectation is that the growth rates will naturally start to moderate a bit from these really high levels, but the overall picture analysts are painting is still one of continued growth for the foreseeable future.
And that path to sustained profitability looks much clearer now, not just a one-quarter thing.
I think so. You have that Q1 GAAP profit as a base. You have strong adjusted EBITDA margins, that fantastic incremental margin showing scalability, and costs growing way slower than revenue. Add in the high-margin data deals. Yes, the path looks pretty clear, assuming they keep executing.
Let's touch quickly on expenses and capital. We know costs grew slower than revenue, but what about capital spending? Are they building lots of data centers?
No, quite the opposite. Their capital expenditures, CapEx, are incredibly low. Just $1 million in Q1. That's less than 1% of revenue.
How do they manage that?
They rely heavily on cloud providers like AWS or Google Cloud. So instead of buying servers and building data centers, big capital outlays, they pay ongoing operating expenses for cloud services.
Ah, the trade-off. Lower CapEx, but higher operating expense for cloud.
Exactly. It gives them flexibility and scalability, but they need to manage those cloud costs carefully, something called FinOps, so they don't eat into profits too much.
Got it. And low CapEx plus good operating cash flow usually means strong free cash flow, right?
Bingo. They generated about $127 million in free cash flow in Q1. That's a healthy amount of cash generated after covering their minimal capital investments. Given the outlook, they look set to keep generating solid free cash flow.
Okay, let's really dive into the AI strategy now. You've mentioned it a few times, but it sounds like a central piece of the story going forward.
Absolutely. It's becoming maybe the cornerstone of their future growth narrative. And it works two ways. Externally, monetizing their data, and internally, using AI to improve the platform itself.
We covered the external part, those big data licensing deals with Google and OpenAI. Sounds like serious money.
It really is. Over $130 million annually based on Q1 run rate just from those two deals. Some analysts, like at Jefferies, are putting a significant valuation just on this data opportunity alone.
And the logic is just the sheer volume and authenticity of Reddit conversations being gold for training AI.
That's the core idea. Real people talking about everything, unfiltered. It's incredibly valuable for teaching AI language, context, even human weirdness.
And you said they're talking to others too, so that $130 million might just be the start.
Potentially, yes. The demand for this kind of data is likely to grow. And importantly, Reddit seems to be managing this strategically. They updated their API rules, requiring commercial licenses, controlling access.
So they're not just giving it away. They're protecting the asset and thinking about user privacy in these deals.
That's the message, yes. A measured approach. But the AI strategy isn't just about selling data. They're using AI themselves, internally.
Okay, how so? What are they using AI for on the platform?
Several things. Search is a big one. They have this Reddit Answers feature using AI for conversational search, trying to make it easier to find stuff. Plus, using machine learning just to make the standard search results better.
Better search is always good on a platform with so much content. What else?
They're using AI tools to help users write better posts and comments, guidance on quality following rules. Could maybe help moderators too.
Ah, AI assisting the human moderators. That could be huge given the scale.
Potentially. They're exploring AI assistance for moderation, trying to make that process more efficient. And finally, of course, advertising. Using AI for better ad targeting, optimizing campaign performance, making it easier for advertisers to manage things.
So it really touches a lot of different parts of the business.
It does. It's this dual strategy. Make money from the data externally, but also use AI internally to make the core Reddit experience better for users, moderators, and advertisers.
That feels like a key differentiator, maybe, compared to platforms just focused on one side or the other.
I think it could be successfully pulling off both sides, the monetization and the platform improvement. That's going to be really critical for them going forward.
Well, this has been a fascinating deep dive. To kind of wrap things up, Reddit's Q1 really showed strong momentum, didn't it? Advertising firing, AI data licensing kicking in. Looks like a pretty promising path for growth.
Yeah, the results were impressive. Strong revenue, improving profitability, and this clear strategy emerging around AI and international expansion. It definitely positions them interestingly in the digital landscape.
And that AI strategy, both selling the data and using it internally, that seems like the thing to really watch, right?
Absolutely. How they continue to execute on that AI front, balancing the opportunities with the challenges, that feels central to their long-term story.
Definitely. Well, if you found this analysis helpful, please do subscribe to Stock Explorers for more deep dives like this one.
And give us a like if you enjoyed the discussion, and hit that notification bell so you don't miss the next one.
Yeah, please do. And maybe one final thought to leave you with. As AI gets more powerful and hungrier for data, how do platforms like Reddit strike that balance? How do they cash in on their valuable data while also keeping their communities authentic and, well, human? Something to ponder.